Stuart here. Oh, hang on a minute. I don't think the audio is working correctly. Let's check. No, it's not. There we are. There we are. Should be better now. Hope that's well. Hope your weekend's gone well. It's Monday. We are the 12th of January already. Time flies by, doesn't it? And as usual, noises out of Wall Street, noises out of Washington have spooked the markets, as well as the situation in Iran. We've got silver and gold at all-time highs this morning, and we've had an indictment. Powell didn't pull any punches last night. The Fed has been indicted, or there's an indictment flying around. The Federal Reserve has been indicted, and obviously Powell's the chair, so therefore he's very much in the frame for overspend on the refurbishment of the buildings. It's bizarre. Trump talked about this when he actually visited the Fed with Powell. It was all very embarrassing then. This might end up very embarrassing. But Powell, as I say, Chair Powell is not pulling any punches and not backing down at all. But anyway, that has spooked the markets, as well as the ongoing upheaval in Iran, sparked by high inflation and people with the devaluation of the currency there over the last week or so, and 500 deaths have been reported across the country. It's not just in Tehran; it's across the country. So, as these deaths escalate, Trump is talking about responses, including military responses. But on the flip side, the Iranian regime obviously defeated when they went head-to-head with... just move me down a bit there. When they went head-to-head with Israel, and as far as depleted military capability and their proxies in the region. So that's a bit of an olive branch to the Americans with regard to talks about nuclear situation and the like. So obviously all of that is being evaluated, but obviously Trump's feeling fairly bullish given the actions in Venezuela. So hence oil weakening. Oil's picking up, but gold and silver all-time highs this morning. 4,600 for gold, silver at $85, or pushing towards $85. Earlier we went to 85.65 here on our charts there, and you can see we're back down to 84 at the moment. But new all-time highs for these key commodities. And if we look at the oil market in reaction to what's going on in Iran obviously huge reserves. We had a rally on Friday afternoon. We've cooled a bit today, but we're still bid to somewhat, but I say the higher time frames remain somewhat muted. We've had this move up last week, Thursday, Friday, and we were up this morning again, but we've come down, and still in all of this furore, we're still shy of $60, and we are over the key 58. But things are moving very quickly, but this remains quite a weak market. We are over the 20-day moving average, but whether we hold that or not going in for the rest of the week, I hope things pan out in Iran. Obviously, we shall see as ever. Anyway, today we are looking to try and trade the opening of the US markets this morning. I don't know if you were with me this morning, but we did quite well on the 5-minute time frames on the two opening trades here this morning at 7 o'clock early. We caught the top of that one there. We moved that down. Now it's target 1, then target 2 on the outer half of the Bollinger Band there. So and then I went off and do some babysitting actually this morning. So I've left that. I've not been in this since I got back about an hour or so ago. But there were our opening trades this morning at 7 o'clock before the open. And we've been done, as I said, the opening trades actually, the opening 8 o'clock candle here was relatively positive, and it's been positive since. But then we got a trigger there and a move down, and that's over, and that might be now looking to move up there on the DAX, but we'll see. Well, that pans out as well. The Dow this morning, we've been pre-market high was really the open last night at 49,475. Our low Interestingly, we spiked there at 11 o'clock. That was a technical move. We went to 49,078. So it's ticking a wee bit high, but not a lot of movement. So it's weaker on all that noise from political noise. Obviously, the J. Powell's situation and the situation, the geopolitical situation in Iran. We closed, where did we close on Friday? When the NASDAQ was up 0.48 of 1% on Friday. The S&P 500 was up 0.65 of 1% at 4966, up 44.82 points. And the NASDAQ was up 0.81 of 1%. So there were we bounced again on Friday, having been weaker for most of the week. So we just take this up to the sorry, let's just look at where we are. So we're still looking relatively well bid here. So we were up Thursday, Friday. So we closed at highs of the week, really. So we're up for the week on Friday close, but down, as you can see. This is the daily candle, so down today on all that shenanigans with around the Fed and the Iranian geopolitical situation as well. So as you can see, our pre-market low is close to the end of day lows we saw last week sometime. So let's see how that pans out into the actual opening trades for the week. Remember, these are obviously all the news of the weekend since the Friday close is all built into the price actions here in the futures. In fact, yeah, so in 5 minutes we got a bit lower than. There we are, 49.75. So within striking distance, 49,000. So again, let's have a look where we are. So we are biased to the downside. Are we going to see a move to the upside? What this is telling me, even on the 5 minute chart, you can see we've got a bit of a what's my trend line here? We got a lower here on our obviously quite volatile stochastics, and we've got a higher lows there. So we've got this bit of a triangle forming in our short term 5 minute stochastics from this low here. So are we going to get a breakout of this pattern? Probably as the volumes tick up. If I just add the volume indicator on here, I'll show you this each time, don't we? If I had the volume indicator on here, and see how that's corresponds. So we had a spike in volume there on this on that 11 o'clock candle. We had a spike in the volume there, as you might expect. Usually 9 o'clock. Let's say usually 8 o'clock. Let's say 9 o'clock for some reason, but that's 9 o'clock my time. So the opening European trades here is this spike candle there at 8 o'clock. So we've moved down in the cash session in Europe and the UK this morning. Found a bit of a floor. See the flat line of the bottom of the Bollinger Band. Around about 49,100, and that spike at 11 is still in play. Watch that, but really you can see the floor here is through here. There's 49,100 level on the horizontal, and the high is another level. So there's like 2 steps up. So the top of our Bollinger Band there sits at 49,300 to the upside would be your first upside target. And then the 49,004, and then 476 as we to the and the opening trades in the opening session last night on obviously quite low volume. See how low the volume is here, big volumes here during the US session. So that see how that the pivot here from Friday, this big, but this was on much higher volumes, obviously not obviously, but where we actually running into resistance now. So an area to watch is literally where we are now on the as we come into the open. So 15 minutes from the up. So through there, this 49,200, and then quite quickly to 49,300 if we're going to go positive. Okay. Obviously, with this strategy, we look at a touch of the outside of the Bollinger Band as our first indicator, and then across of the K and the D line. Remember, we're using the stochastics here at 10, 6, and 3 is the setting, and we're looking for a cross. But you can see this is moving lower, so it's a bit messy. It's not something I'd be looking to trade with. But as you can see here, having said that, the last hour or so since 12 o'clock or last 2 hours, we've really been sort of just in this upper half of this Bollinger Band, ticking higher. Some a bit biased to the downside, probably some buys at 49,000. Certainly at 49,000, we got that low here. The big interesting volume there, 9 o'clock London time was this candle, which was again, it could be some technical situations. It could be a sell set up, and then that they bought back that sell position as we drifted low. So general positivity now. So the weakness perhaps is playing out, but let's see how the cash session actually opens. Let's have a quick run round the other markets whilst before we come back to this trading position. So that's the Dow. It's not looking a great deal of opportunities there. Nasdaq, similar. Again, the Nasdaq and the Dow are the two we prefer to trade. Let me just take the volume off. So again, we got our low. Let's mark them on. Our pre-market low today has been our pre-market low. Our pre-market low is here. Let's move these. Sorry, move those other ones. Right, sorry. Just reset. There we are. I was wanting to move that. Oh, let's move that one. Let's just move that out. I wanted to move that. Let's fix that one. Why that's fixed. Actually, goes out of the way. Sorry, I know it's made that. So that's our pre-market low today on the Nasdaq. Our pre-market high this morning. Again, all going back to last night was over here. It's got 9 o'clock. It's got 9 on somewhere. So pre-market high is here. Let's put another one on there. So there's the sort of opening positions last night, and we sold. This has gone down to 25,460, and again, it's been ticking up. But as you can see now, this is now sort of the last 20 minutes been playing with the 20 period, moving average on this 5 minutes. So it's short. It's a little bit a short there on that cross there. We've touched the outside here, but we've been waiting a long time now. But that's the confirmation turnover there. So again, actually quite weak moves for a Monday morning, but that's a short position. But again, you see, if you had your stop loss even at the top of the Bollinger Band here, it's gone against you immediately. So it's some messy moves, but then it's triggered a lot. It's tried to go long, but obviously that's not. So you'd have closed out that short, but that would have been the short would have been closed out, and then it would have been quite a risk to re-enter short as it's gone under. But anyway, it's messy, not clear to me. Let's see what happens on the open. We might expect some volatility there, but again, Nasdaq 100. Remember this chart here, and the Dow quite very messy, not clear for a Monday open. Not as clear as the DAX was this morning pre-market. So we'll see what happens. Let's run elsewhere. The dollar's been under pressure because of this the indictment story that is running. So if we just look at the euro, 1680. I'll just come back a bit. So this morning, sorry, let's go to the hourly chart, not 5 minute chart there. So this morning there was the that's the first hour's candle of this morning. Big rally. I mean, dollar had been on the front foot for all of last week. I mean, so it's the hourly chart from last week. So from this breach of 118, took us all the way back to December the 24th. We've been moving lower, haven't we? Dollars been on the front foot, but the markets don't like expectations of this indictment, the lack of independence of the Fed. So the dollar took a significant whack, and we're back to 116.80. We've been as high as 116.97, but interestingly, we haven't been able to breach the key 117 level, which is an area we were pivoting through for a lot of last year. So still relatively on the front foot. This is only the hourly chart. It's only today. It could all end up going backwards, of course, with the volatility. But things are moving quite quickly on news at the moment. So euro back up to 116.80. So dollar rally has paused for now for today. See how if there's more news during the working day in the United States. Aussie dollar back to .67 today. Yen 157 or 158 was breached on Friday, and we're back down, but still, not that much further down, are we? 157.90 at the moment, so dollar's relatively well bid against the yen. The yen's come under pressure. Chatter over the weekend that maybe a snap election have to be called by the new Takamichi, the new prime minister there, to get her mandate for herself. Remember, she became leader of the LDL, but wants her own mandate. She's quite popular. She's rising quite well in the opinion polls. So it was one of the member of the coalition talked about a potential election sooner rather than later, as early as February. So again, watch that. But the yen's come under a bit of pressure on that. The Nikkei moved up this morning, but not as much as many might have expected. We'll just have a quick look at the Nikkei. We're talking about Japan. Nikkei 53,800. So it rallied up this morning. Sorry, that was Friday's non-farm payroll result, wasn't it? Stock market's fully crawled positively, but it sort of moved up this morning, but it hasn't. It's gone sideways again at the moment. So still, but if we look at this on a daily basis, it's very well bid around these new all-time highs, which we got on the close on Friday on the Nikkei, following the disappointing non-farm payroll coming in at 50,000 for the headline. I'm sure we talked about that a lot on Friday. If you want to analyse it a bit further, let me know. We're happy to talk about it more. Where was I? I was the major dollar crosses, wasn't I? That was the yen, USD, CAD 138.80. Also coming back, but dollar's picked down a tad again today. But it's only the hourly chart. The daily chart is still intact. It's the first down day we've had in a long while there for the Canadian loonie. As we said on Friday, struggling to get over this. The 138.80 was a key zone we marked earlier. So with some profits being taken there inevitably on Friday and again this today as we move lower. So sterling 134.70 this morning. Daily back up. I mean, I had 4 days down last week. So we are back over, not back over 135. 135 remains up here. 134.50 has been breached. That's a bit of a mess now. Tidy those. Let's move some of these. It's confusing even me, that. Not too many entry stop loss. Something like that. So that's 132. It should be. Let's coordinates 134.50. Change that. It's a full line. Dotted line because it's 50, isn't it? Let's put in a 134.50. So there's our 135 up here. So it bounced again, but then you see that you wouldn't see that down, that uptrend looked like it was over for 4 days. Big up day, but we could also move back down again. So sterling back up against the dollar at 134.50 is that pivot sort of area where we are at the moment. And Swissy 79.60 this morning, down again. Swissy stronger, dollar Swiss, that rally from the lows of at the beginning of the year to 80, couldn't hold 80, and we're back down again now. So maybe just a little blip, or maybe the end of the post-Christmas dollar rally if Trump continues. He also said yesterday about capping credit card rates at 10%. Obviously, all an eyes on this idea about affordability is going to be perhaps a big mantra as we look at the November midterm elections. Obviously, sitting governments around the world tend to get clobbered a bit halfway through their fixed term. And US no different. But it's a bit of a knife edge in both the Senate and the House in the US. So Trump will be doing everything he can to hang on to their majorities. And so affordability is a big word you will hear probably a lot from the politicians as we go through the. Obviously, we got CPI tomorrow. Key reading of CPI for the US tomorrow. Again, a bit of a cleanish, bit of a messy reading, a bit like we had potentially with the non-farm payroll on Friday. But has it started to spike up? Is it rising, or is this persistent and sort of de-inflation in the services area counteracting the spike in goods inflation? But we'll see all the details tomorrow. Hopefully, a clean reading again tomorrow. But more on that, obviously, tomorrow. So, where are we? We're 5 minutes ahead of the open. So let's have a look, see if we've got any cleaner noises from our two US indices on our 5 minute preferred 5 minute time frames. My friends, not really. We're through. So this break. Whoops. So the break of our triangle has happened here to the upside. So it's sort of continued to move higher. But this strategy now will be looking, having touched the outside of the Bollinger Band there and not moved down, moved up. So there we've broken out. We're looking for a cross to the downside to take this short. Let's check that. Even though we sort of burst out, so this rising momentum may still be in play, but it's not enough really to take a short position on that, given the sort of rising price momentum. As I said, the area to the upside we'd be looking for would be this 49,300 area. What you can see there on the 5 minute time. I'll zoom this in a bit. Those tops of those candles there, that's that area I was talking about. So let's put that in through there. The tops of those candles there takes us to this 4-3. So that might be an upside type if we can keep this upside momentum. Otherwise, we're still, there's a pre-market high, there's a pre-market low. We're still, closer to the low than the high. If we do a fib for the day, so if this is our opening trades, we do a fib range for the day. We've moved, but we're stuck at the first key fib level at 38.2 from the low. So there we are. So we need to break basically where we are now to the upside. Then we'd see the 50 at 49,275, and then that cluster through there at 4,300, and then the key 61.8 is the other side of that at 4,9,320. So they're the upside targets. What this strategy is looking for is to cross to the downside. As you can see, that's been sold out again. So we've broken out of this. So we're biased to the upside. So it's a continuation to the upside. We've broken out of our little triangle we'd drawn pre-market earlier. So that becomes a little irrelevant now. So we'll get rid of that. And we're moving to the upside. So, but we are now moving into this over this 80 area, which is now typically an overbought area for the stochastics. So a cross up there would be a bit more significant than a cross below. So we're moving high. So it's a continuation trade really on from there. But again, the signal's too weak to take at the moment. So again, part of trading, remember, guys, even though this is sort of is not doing anything, it's sitting on your hands and waiting for the market to come to you rather than chasing it. So we are literally into the opening trades now. It's 14. There we are. Make it a bit bigger for you. 14.29, but looks like there's it looks like potentially quite a muted open for the week and open for Monday. We tend to get possibly some movement. We had a quiet opening last Monday, if you remember. Sorry, my phone just went off. Excuse me. We'll see what happens. Probably it might be more. action in the Nasdaq. Doesn't look like it, does it? But that's actually moved lower. So that's actually moved lower into the bottom of the Bollinger Band, and now opening trades are buy. So we're buying this this at the moment. So again, as our that's bias to the upside. So the Nasdaq's actually doing positive. Flip back to the Dow. The Dow is going in the opposite direction. Interesting, eh? This is what happens. So you trade the market you're looking at, you trade the action you're looking at. S&P is following the Nasdaq. So the Nasdaq and the S&P are ticking up in early trades, whereas the Dow is selling off to the downside. So nothing really to trade, to be absolutely honest. That would have been that been moving down here. So there's the first touch. So that's played out a bit better. So there's the first touch, but it's moved. So you'd have moved here, there. That's but the confirmation. There's the cross there on this 5 minutes prior to the open, and this current candle, which is only a minute old, obviously. We can't make a decision on because the candle isn't closed, but that's looking relatively positive, isn't it, to the upside. So remember those areas we were talking about, 25,700 or 25,690 was that pre-market high. So that may get tested. A narrower range in the Nasdaq. So the Nasdaq looking relatively positive there in this first opening minute of live action. Let's have a look at how that's impacted our European preferred market. The DAX. The DAX would have crossed there. There's a very weak touch. And again, I wouldn't have traded that. Again, we've had a nice move down there. It hasn't burst down. It was one candle or two candles, the wicks moving down. Again, another weak move on the Nasdaq, on the DAX, on the US Open. So interesting, quite a quiet opening movement for the indices in the United States. I thought we might have had more action on the cash open, but clearly not. Maybe more action in the Forex market. Let's look at let's look at the Euro. 1676. That's looking a bit more like it. It's about more of a move there. So that's your touch. That's the cross. It's gone up. That's the move there. So that would have been an entry here, target 1, and then target 2, quite dramatically again. So this is now looking to go long. It's there's quite a floor there, 1675. Bang, bang, bang. Since early morning, since the opening European cash, that's an interesting buy zone there. So 1, 2, 3, 4, 5 times. Are we going to break down to this, or are we going to move higher? We'll see if this turns quickly. So that's looking relatively interesting as a potential buy for the Euro there on the open of the US market, and the opening of the week market in the weekly market here on Monday morning. So interestingly moved lower, so you're really watching that one. Might even sort of risk a tentative buy at the moment, but that's been obviously a strong move back against the Euro when we went to rejecting 117. And we've taken out 25 pips to the downside, so this might be looking to, as I say, there we are, that buy through these triggers here on this short term on the Euro. So that's looking a bit more of a mover. Let's go back to everyone's favorite gold, 4595. So again, that's a move down. That might be looking to buy that on that cross there. So watch gold on the cross as we get into the open. So gold's potential buy yet to cross here. And see if we've had any follow through on the Nasdaq. So our Nasdaq candle is still not closed. It's still a 5. There's a 5. It's not 35 yet. So interesting flurry. Are we going to stall at the pre-market high, or we're going to push to a new pre-market high? This might be sellers matrix again, depending on how your system's set up. But remember, we did close positively on Friday. We've had all the weekend news, the 2 days, Friday, Saturday, Friday night, obviously Saturday, Sunday, and plenty of news there's been as well. So that's all been absorbed in these opening trades in the Dow. So the Dow is opened relatively, the NASDAQ is that we're looking at, isn't it? Has opened relatively positive. So we're back to where we opened last night on the futures market. The high from Friday, following the disappointment from pre-market, the disappointment of the non-farm payroll headline, took us to 25,800 here on this derivative mark. So that's another one to watch later on, if we can hold this 25,700 level. That's 25. So I'm talking in round numbers now. To the upside. So all the negativity has been taken out of the European and the Asian reaction to the news, and we're positive. Obviously, there's very, very little economic news that's actually going to move the market in this session. So we've opened relatively okay, given the movement up. So it's a positive start there for the Nasdaq. Let's go back to the Dow. The Dow was mixing about. The Dow's done the opposite. So that's really extended, hasn't it? So it was a big move down. So it's gone the opposite. So the Dow has gone below the pre-market low. So our new low for the day is in this current candle, taking us under the 49,000 handle. So we found buyers at 49,000. So we found resistance, as we were saying a minute ago. We found resistance at this 38, this first key fib level on the up. So that although we were biased up, it was looking quite weak. So peculiar to the Dow, we've gone lower and produced a new day low ahead, which is lower than the pre-market low. So that's relatively negative. So we've got this divergence between the two US markets. The DAX back in Europe has had a move lower, and on the open has really done nothing. So the US open is negligible as far as the DAX is concerned. And it's continuing to move sideways. Let's just have a look at these markets with different. Remember, this is a mean reverting type strategy. This the Bollinger Band and the stochastic. So we're looking to go like this strategy now would be looking to go short once these, or the simple version of this, once these two, the K and the D line here on the stochastic setup cross. But at the moment, obviously, they're both moving up. So we're in correspondence, we're converging, if you like, rather than diverging, and we're moving high because of this big one candle on open. So new high, that first 25,700 levels being hit, the pre-market high, and then the 25,800 is the next upside target there. This trend continues, which is what the stochastic lines are suggesting as we've moved up. So it's not mean reverting. We've suddenly moved up or the trend up has been confirmed here. So if we look at a trending setup, something like the crossing moving average, it would have been quite violent on the short term. So again, this was not doing much, but it was sort of holding from the morning, from the break over the 20 period here. Most of the Europeans have been above the key 20 period moving average, where there was a move lower ahead of the open, and then here pre-open we were back over the 20, and then this is a big move here. So again, that 5-minute move has been to the upside. If we just tick this up at the 15-minute time frame, you can see how the 20 period has been the support area all morning. I've had moved lower. We'd been under it all of the Asian session, most of the European opening session. Now we edged above it here mid-morning in London at 11 o'clock, and it's held it, and big opening candle to start the US session. There you can see clearly, next upside target, that 25,800 level from Friday night. But again, US close, so an up move for the DAX. And again, different layout. If we look at the MACD and the parabolic SAR, that would have been supported long here, but really chopping around sideways, so not really giving us any direction. So not one we could have applied. And different layout. If we look at the VWAP with the Heikin Ashi candles, again, that was sort of buy. We were weak. We were then playing here. We've been running round. Is that only something that can't be right? Something's wrong there. Let's say 9:30. It's supposed to be the 5-minute time frame. The timing's obviously gone a squiffy here on my Heikin Ashi candles. Was that? So 9:30 should read as 14:30 my time. I don't know why that's reset like that. But anyway, you can see this is hourly. This hour or so before open, we were back to the VWAP for the day, the 3-minute VWAP for the day. I've been those lows at 23.4, and that's sort of moved high. So that's quite a positive move. Now we're into the 10 minutes of the opening trade, and another key fib level on here. I have to see how that chart's rebranded now. I don't know what's happening with that timing on there. To reset that. So bit of a messy but interesting, a divergent move from the two trading trading indexes. So Nasdaq remains long, having boost. So it's a continuation trade from that opening candle. Move down a bit. Again, where would you have your stop loss on this volatile move? Well, that would be a very conservative on that move, wouldn't it? Down there, if you'd taken this too volatile for me. See how this continues, but that's still looking relatively positive. And then the Dow, on the other hand, has done the exact opposite. But there we are. See, we've bought it back. So it's obviously some particular trades going through in divergent character for the Dow and the Nasdaq on the open, and now we are both long. And there's that first level we talked about being taken out. So we did push a new low for the day, and then within 10 minutes we're now back to the pre-market high and pushing to the upside. Those resistance levels we talked about. So and see how things can turn around very, very quickly. So buyers obviously in the ascendance here within 15 minutes of the open from the initial big spike to the downside, but obviously there's plenty of so all of this sort of accumulation, if it might have been that this morning in Europe for the Dow has been probably stopped out. So, well, not probably, definitely stopped out on that big down candle, and then they've allowed to buy here, and then we're moving back higher. But yeah, I'd like to see a break for the 49,300, the opening high of last night, to certainly see if this is going to be a bullish move for the US morning. And market continues to move higher, and if there's any further repercussions out of the this indictment from the administration against the Fed. The other thing that was being announced this morning, apparently, is that it's likely that there was chatter about the Supreme Court's announcement. Could have been as early as Friday with regard to the legality of what how Trump has put his tariffs on. It's not going to stop the tariffs being in place. It'll just, the administration, I'm sure, will use other legal avenues. But again, it's a sentiment indicator from the Supreme Court. Remember, the Supreme Court that's very much coloured in Trump's colours, having nominees and appointees in his first term. So that is likely to come. Their opinions are due on Wednesday, so that's also scheduled on Wednesday. Obviously, this week, as we said last week, the fourth quarter earnings season kicks off tomorrow in earnest. JP Morgan, the Wall Street's biggest bank, report along with BlackRock and Delta Airlines, Bank of America, Wells Fargo, amongst the others, reporting on Wednesday, and Thursday sees Goldman Sachs and Morgan Stanley. So the big Wall Street banks all reporting fourth quarter earnings, which are expected to be relatively positive, and that can set the tone for the rest of the earnings season. Obviously, individual sectors are performing differently, and we'll see how all that pans out. So, to be honest, no real trading opportunities here in these first 15 minutes of the session. It's a bit too messy for me. I'm happy to sit on my hands. I'm happy to hang on to the move we got in the DAX on the opening pre-market at 7 o'clock this morning, but that's not not something that's my systems are triggering for or worked out with any significance. Sorry, let's bring that with enough certainty to say what's going on. So the Dow went short, now it's long. The Nasdaq went long and continued to go long, didn't it? Where it's perhaps rolling around at this the pre-market high again at the 25,700 level. So that's a bit of a continuation trade, but again, if you'd got in on or following this big strong candle, you're sort of flat at the moment, aren't you? If your stop loss is down there somewhere. So again, nothing I get too excited about. The euro and gold looked a bit more interesting, didn't it, when last time we looked? So let's bring in metals. Got to gold. Is gold about to trigger? Gold had triggered, hadn't it? There. So there's the move down. That's a nice strong move down. That would have worked out quite nicely ahead of the market. So the open is here. So that would have been, in fact, no, you'd have got in there again on that one. So 610.38 would have been the tick to the upside, but it's gone against you. Stop loss probably down about here. I'd say 5.840. So that's a bit of a move, but it doesn't look like it's going to work out. So there's the stop loss there. Make that red for you. That would have been the stop loss. That would have been quite a clean entry there because it's already gone through the Bollinger Band. Remember these all-time highs. So obviously a bit of volatility. So that would have been a buy. That would have been a green. There's our stop loss. Initially, we come down. So wait, doesn't look like that's going to happen. So let's move the stop loss up a bit to the bottom of that wick, and we'll see how that pans out. So it gets stopped out. That's looking more likely to get stopped out than continue up to the other side of the Bollinger Band, doesn't it? So anyway, that's a relatively clean entry there. You can see what's happened there. We've had a big move down, but again, that's had to wait. There's the initial touch of the Bollinger Band there. We've got an initial entry there, and it's going to stop you out, gone against you. Yeah, it's a messy situation. So this one may be stronger, may not. We'll see. We'll come back to that. Euro looks like it might have been a cleaner entry as well, didn't it? Earlier. So that was the touch. That was the cross we were talking. Yes, the cross happened. So again, it's gone against us initially, but again, that would have been probably again enough. But it's had a strong move down, hasn't it? So having missed this move down, this is a retrace. So again, many traders have using the a Bollinger Band system or this particular system will be reluctant to take that, having had this big strong move here, because the move up is a bit weaker. But again, the system would have taken it if it's that would have been enough to get in. So again, another one which would have got in there. Stop loss would have been around the low of the day, so that's a long. Keep the stop loss relatively tight, so stop loss. Oops. Sorry, stop loss. There to make that red because that's a stop loss. So that's our stop loss. That's our entry. Let's see what happens. Obviously, target is all the way back up there initially. Let's see if we've got momentum to do that. But this is looking quite weak. So that's in play. Not the indices for a change, and gold in play, but gone weak. So it's gone weak, but we're now back into the under half of the Bollinger Band. So that's not looking great. But the K and the D line continue to move to the upside. Obviously, these might flatten out at the moment. So we'll see how that pans out as well in the next few minutes or so. However long we're staying here, I'll let you know on the update. As far as our end of day strategies are concerned, we a bit mixed this. Oh no, we were mixed. I can't remember. We're a loser and a winner, I think. Where were we this morning? Yeah, Kiwi, Euro, Kiwi, and Euro Yen. Something else on, wasn't it? Yeah, and the other one was the Kiwi itself. So, sorry, let's bring that. Come back to that. So let's go and find those. Position. I think they're still on there. So New Zealand dollar. Taken off now. Oh no, because it's 5 minutes, isn't it? We'd moved the stop loss. That was target. Hang on, what happened there? Lost track where we were. All right, so this was this is the one that came within of getting stopped out, didn't it? On Friday, it didn't happen. We took profit after non-farm payroll, and then we moved our stop loss up. I'm confused now. Where's my entry? We're still short. Have we stopped? Oh, yeah, sorry. I've gone mad out. Yes, so I'd moved the stop loss down, sorry, and we got stopped out this morning. That's right. On that one. So that was closed out. So that's closed completely. That's why I was a bit confused. Sorry. So that was a closed position. We'd raised the stop loss below our entry. That's right. We were a short entry, weren't we? That's target. And we'd moved the stop loss below the entry. And so we made another 5.5 pips or 11 points on here, 57.52 to 57.41. Half of that was position. So that's why looking at that's confused. The other two positions were the euro, weren't they? Euro yen, which is or was still open. There we are. So this was entry on Friday night as well. Hit target on just after open this morning. And then now the stop loss is above target one. I moved that earlier, just below that wick we'd seen at 8 o'clock this morning. So it's coming back a bit, but I'm going to leave the stop loss there. So again, that can't lose that second half of the trade. Got in here, got out there. So that's a winner. And the other one was I closed out just before we came. Oh, it was Kiwi as well, wasn't it? Yeah. So I'd what was this? This was long as well, wasn't it? So it was messing about. This had got to the target was up here. This is a long position, so it turned around this morning, and I closed it out manually for I don't know what it was. I'd write it down. I'd written it down. 11-point loss as well. 13 wasn't. I can't remember. Where is it? I'll write it down manually because I haven't got my trading platform here. But again, that was and you see it's a minor loss on that one as well. So a winner and two small losers this morning, which is what we like to hear, what we like to see, isn't it? It's the way to do it. So, is there any queries? I've been here nearly an hour, guys. Anybody got anything they want to add? It's Friday, Monday afternoon. Let's have a look. Let's go back to that euro. It was that one, wasn't it? The 5 minute. Is that going anywhere? Address that. Right, so that was long. There's our stop loss. Looks like we're not going anywhere with that one, doesn't it? But anyway, it's still in play. Stop loss not going to cost as much. About 5 pips on that one if it gets stopped out at the moment. So we'll leave that one. So I tend to like this on the indices on these opening trades, but opening positions. But we'll look elsewhere. The busy markets, and again, gold just meandering sideways. So I'd be happy enough to leave those. I finish where we started with the Nasdaq and the Dow. Excuse me. So the Nasdaq continuation continues. So if we had got in here on this big opening candle, we're now in the money, but we're now pushing higher. The K and the D line both into the overbought area. Remember, over 80, but we can remain overbought for a long time, as everybody says, with oscillators. But as you can see, we're pretty peaky here on our blue line. So we may want to be just take some off certainly there. But if the momentum continues, our next upside target would be that 25,800. So I'd have, if we had traded this, as I said, we didn't. I'd have taken half that position out now, having gone through our pre-market high and followed through for 10 minutes that we've seen now. I'd be happy to take, given the peakiness here. You can see that. See why? The peakiness of the oscillators. See that top there, 90, we're over 90. And again, there we go. And you see that some profits being taken out there. The Dow was worse because it was all over the place. It went down and then went up. But that's now gone through its pre-market high and it's continuing to move higher. But look, it's because of this move, this down and then violent reaction back upwards. We've got this. Remember, we got this extended triangle now. Remember the triangle we drew before on the 5 minute? It was just we took it down. It was here. We were looking at this. This looked a bit interesting. That was our pre-market bit, wasn't it? We had that, and then we had one at the bottom from here, and it was looking. We had that sort of. Well, it was a bit better than that, wasn't it, before? But I don't think it was that far. But anyway, so we've broken out to the upside, but it's still messy. More messy on the Dow for a change than the Nasdaq for that one. So again, no trade for me because it's not clear. If it's not clear, do nothing. Okay. Hope that's well all made sense for you. If we just bring up the calendar for the rest of the week, if you didn't see us on Friday, the high impact events here. Obviously, tomorrow is the big day. We have Justin Bailey's got a speech. I didn't see that on Friday, but it's the US CPI data on tomorrow. We'll be live for that. Perhaps more action on that. 2.7% is going to be what markets are looking at. See what the monthly numbers look like. Obviously, a lot of this is being delayed. We've got PPI the following day, and probably more important, retail sales figures. So Wednesday this week, key, and then the weekly unemployment claims again on Thursday. So a relatively quiet week this week, but watch the noises out of Washington. Lots of stuff getting thrown around, and the geopolitics from Iran to still the horrible situation in Israel, in Gaza between Hamas and Israel. And elsewhere in the world, obviously, Latin America very much in focus following the abduction, kidnap, if you call it that, or the decapitation of a terrorist, narco-terrorist, depending on what side of the aisle you're on, out of Nicaragua, out of Venezuela, and repercussions for Latin American markets. Obviously, the situation in Greenland continues to make me smile. And then got the serious situation between Russia and Ukraine as well. And the Chinese will have something to say this week as well, no doubt. So take care. Watch this CPI data tomorrow. Nothing really going on there for that open trades on Monday. So keep your powder dry, wait for a clean signal, and act accordingly. So take care, everyone. I will see you all again tomorrow. Be good, be safe, and arrivederci.